What's up, guys? So I'm going to make a quick video, try to bang it out in 3 minutes or so about how we caught the top on the market, the bottom, and then maybe what could be the top again right now. But we'll take a look at it in detail here. So this is the weekly chart for SPY. So remember, you guys always want to start out on the weekly, go down to the daily. The higher the time frame, the stronger your levels will be, right? Because that means it took longer to either break or hold another level, right? So what we're going to do is take our Fibonacci retracement tool. You can look this up on another one of my videos, okay? We're going to take the previous high, right? So this was the all-time high, came down, right? Came up. This is now our lower high, right? So this is a lower high compared to this. Okay, so this is the current lower high, right? And the high of the market in this downtrend. So I'm going to draw it from here to here, okay? So that just means that basically what I'm looking at here, and here's my settings, I'll leave them on the left so you guys can copy them if you want. But basically what this means is that this whole range from 462 down to 362 is $100, right? So 50% of that would be $50, so that's why it's at 412. 70% of that is 433, okay? So what hedge funds and institutions do, a lot of their algorithms, they base it on Fibonacci. And usually around between the 618 to the 786, that's what we call the golden pocket area, okay? It's going to be where you usually will find a type of rejection. So you don't blindly take these entries. Now you can start to scale into the positions around here, right? But we took longs on the breakout here, right? So this was a totally different trade. We waited for the channel here, right? This is a channel we have down, right? To break out to the upside. So we played calls here. Now we closed them somewhere in the middle of this week here. We're on the weekly chart. If we switch to the daily, I can show you guys a little more clearly. I think we closed them right around here or here. Okay, so we didn't get that full move. Now when you go to the daily, you notice something else. I also have this red line here, okay? That is my 200 moving average, okay? The 200 moving average on the daily is one of the strongest indicators as well. I just call it the 200 DMA personally. So we saw this little wick off of that 200 MA, right, on the daily. So this is where I started to enter into some shorts. Chopped around a bit. Now when you enter on the daily, you do have to give yourself 2-3 weeks time because you're playing it on the daily chart, right? How long did it take us to get this entire move? You can see here, 30 days, right? So if you want to capture at least half of that, you're going to need at least 2 weeks time, right? So this is where you play at least 1 to 2 weeks out, okay? And you know that on the way down, usually the drop is faster, right? But you can see over the past 4 weeks, right, of trading, we've had a significant move down. Now that we've established here, right, we have our GP here. Now that we've established that this is a high, now we want to see where it could be a potential what? High or low, right? Maybe if we don't go all the way down here. So what I did was then, now we have a swing low, okay, here. And we draw it up to our swing high. So this is now low to high, okay? And you can see, where did the market bounce? Exactly, right here, right? SPY, right at the golden pocket, right at the previous what? Breakout zone. This was a huge chop level here. A lot of people thought that this was gonna break down, right? Right here, we ended up breaking out, retested, pop back up. Now we're coming back down here. Is it a potential high or low? Sure, great spot to enter calls. This is where a lot of people thought the market was going to dump and fall off. I was bullish here. Now, I am bearish. Why am I bearish? Well, I'm bearish here because if you take a look now, right? Let's pull this up here. Oops. If you pull this up here, okay, basically what you want to look for is on your Fibonacci retracement, right? Let's look at this again. Here to here, okay? So this is what we had in play. Now when you get this bounce, now I'm looking at tech because tech usually pulls the market mostly. When you got this bounce out of the golden pocket, same as QQQ, right? It was at a key support level. Now do I expect this to hold? No, I am long-term bearish still. So what you want to look for is when you play out of this golden pocket zone here, your first target is always going to be that 50% retracement. So from here, right, to the 50%. As we go up, right, the next target's the 382, so forth and so on. So I began to scale into some shorts here. Now we have this line drawn here, okay, 302 or so. If you look at the 15 minute, right, from today, I exited all my calls here, right here and here, these two candles. And as soon as I saw the first inverted candle that was bearish this morning at 11:15 a.m., this is where I started to enter my puts. We got the immediate huge sell-off here, right? We were able to take some great profits on day trades, and as well as get good entries for swing trades. Now we got the big pop up, and now we have to see if we make another lower high here and continue down, or if we break above that 302 level. If we do get a close above 302, this would invalidate the shorts that I have for now, and I would look for a potential new entry. Where would a potential new entry be? Well, if this is now the higher low, and this is the swing high, right, I would look for one where? Probably somewhere around here or around here. 312, the 50% level of this move, or the 70% here. So I went a little bit over, it's about 5 minutes, but hopefully you guys learned. And if you have any questions, comment down below. Cheers.